Hey traders, welcome back to our channel. I'm Kenya with BK Trading Academy. In this video, I'm going to show you how to hold your trades with confidence using one tip. Because what I've found is that a lot of especially new traders, but even existing traders who don't have the confidence yet in their trading, is that when you're in drawdown, you're holding trades way too long, which I did too as a beginning trader in my early years. And then as soon as you're in profit, you close those trades very quickly because you're probably just happy to be in profit again, right? But when you're in drawdown, you're holding the trades way too long. So why are you going to risk, $100 on one position, but then when it gets in $10 profit, you close it out? So I'm going to show you one way that can help you hold your trades with confidence if you want to consider this. So let's go ahead and hop right in.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
Currently, I'm on the daily of AUD USD, and one of the things I want you to notice is just what the price action is doing. So let's say, for example, if we took a short opportunity when the price was in a downtrend. So notice that we just made a new high here at 66.63, but before that, we were trading in a downtrend. So here's our market structure. We have a low, we have a lower high, we have a lower low, a lower high, we have a lower low. And then we created a high that was higher than this high. We did not create a new low here. So this would have told you that, you know what, we just might be coming to an end in this particular downtrend because we failed to create a new low. Also, you can see the imbalance between buyers and sellers within this zone, and price came to a very strong demand level, which attracted buyers. Buyers stepped in, pushed the price up. The price came down. However, because we failed to create a new low, price continued to push higher. We broke this high in our downtrend, and then we created a new high. So this tells me that I potentially have the opportunity to keep buying, and what we might be seeing is a trend reversal. So at this point, I'm going to sort of switch my bias, and now I'm going to be looking for an opportunity to the upside. So now that price has shifted, what I need to do is I need to move my zones. So I'm just going to show you something really quickly. Let's say price broke this high at 65.95. This resistance is now testing as support. We also got a pullback or a bullish flag pattern after this bullish impulse. Now, if I take my Fibonacci retracement tool and I measure this impulse from the low to the high of the impulse, you can see that price is currently rejecting or near the 50% Fibonacci retracement area. Now, typically we want to trade when price is near the 50% to 618 Fib when we're in an uptrend. So we want to see a correction of about that. It doesn't always happen, but majority of the time it does, and that's why we call it the sweet spot. Let's say if we get long right within this area, price will probably get down to about 65.71. But even if you went long right now, let's say you get into the trade and you're looking to take this trade to the upside, right? All right, so here's one confluence that you can use to help you hold your trades with confidence. Number one, moving averages, and you can use a moving average crossover. So I'm going to show you how moving averages work, and I'm going to show you two effective moving averages that I use and how I just use them for confluence. I don't like to show them on my chart because I like a nice clean chart. I don't want anything that's going to clutter my thinking or clutter my chart. Let's go ahead and look at moving averages, and I'm going to show you two that I use, which is a 50 simple moving average and a 20 exponential moving average. Okay, so we are going to buy. This is our target area to buy. I'm going to go ahead and show my 50 period moving average. So you can see that when price is above the 50 period moving average, this moving average is acting as dynamic support. Okay, if price crosses below it, then it's a sell opportunity. Price is acting as dynamic resistance. So for example, if we had shorted here, look how this area was previous resistance. It was also previous resistance, and it retraced back to this area after price fell to the downside. We could have used this moving average to help us in terms of having reassurance to keep shorting, or if we needed to switch our bias once the price crosses the 50 period moving average. So now let's say that I buy right off of this zone, and I'm going to go ahead and add a 20 exponential moving average, and look how currently there is a gap between the price actions. So you see this? Now this gap is closing. So when you have a nice gap between these moving averages, and simply moving averages calculate the closing prices of the last few days of whatever period you're trading. So if I'm trading a 50-period moving average, it calculates the last 50 candles on my price chart. And it's basically just telling me what the price has done over the last 50 days. Has it been trending upward? Has it been trending downward? That's what moving averages help you do. It can also help you identify when the trend is potentially changing. So look here where we had a downtrend, and that downtrend has now been violated because we have a new high here. So now what we're going to do is we're looking for a retracement, and this is where we can also use something called a retest. So if we broke this high in the downtrend, we're looking for price to come back to this area, retest it, and give us a potential buy opportunity. Now, when these moving averages cross, okay, so let's say they cross, once I am in the trade, as long as price stays above this crossover, I can continue to hold this trade with confidence, okay? So if I want to clone this area here, I'm going to clone this area, and we're going to now find a resistance level. Since price has given us a resistance right here, then if we were to buy AUD/USD, we can put our stop loss below the moving averages, comfortably below the moving averages, depending on your risk tolerance and your risk management strategy. And you can trade this confidently. So as long as price stays above it, then we can continue to go long in the market. But if the price were to fall below the crossover, then that tells us that the trend may potentially change, like here, for example. So notice here we had a crossover and then price dipped below. So if you wanted to short, or let's say if you shorted here, and you're wondering, well, where should I take profit? But as the price goes in your favor, you see that you have a crossover. Well, all you do is find support and resistance. So if you know that you're shorting, you're going to look left. Where's the nearest support? Right there. Price came to the support, bounced off of it. You would have taken profit somewhere within this area. Then price bounced upward. It came back. All right. But as long as it continued to trade below the crossover, you could keep shorting. So that is one way that you can hold your trades confidently, especially when you are short-term swing trading, for example, or if you want to hold that trade for a few days when you see that the market is expected to go in the direction that you intend. You can use the moving average crossover. And I simply just use a 50 simple moving average and a 20-period exponential moving average. Now, I don't use them all the time. Typically, what I like to trade with is the 50 MA. A lot of our students trade with that too, because they do a lot of what we do, and then they take it and make it their own. But I want to help a lot of traders who struggle with holding their trades. If you are a scalper, for example, you could still use this same strategy, and you can use just a lower period. For example, you could use like a 20-period moving average and maybe a 10 and use that as the crossover. Or, scalpers, you guys know what you like to use, so you can give tips inside of the comments. But this is one effective way that you can definitely get used to holding trades when you're expecting price to go your direction, and maybe sometimes you get scared and you want to close that trade out of fear. Use a moving average crossover to help you, and that'll give you some extra confluence. So I hope you found this helpful. Be sure to smash that like button and make sure you comment. Let me know how you like this video and maybe something that you took away from it or what you'd like to see in the future. If you are a new or struggling trader, I encourage you to check out BK Trading Academy. Go to our website, really study our track record, and listen to what other people have to say. We have an awesome community, and we're very hands-on, and we love what we do. So I hope to see you in the next video, and thank you so much for watching.
Yeah, I know I got problems, and I don't know where to go. I don't wanna put the blame on you.